I began my trading journey in 2016, and little did I know what I was getting myself into. I mean, I too fell for these shiny objects. But then I realized how serious this thing we call trading really is. And so, this video is for people who want to trade in the futures market. A brief introduction and some steps in getting started. And for those of you who are new, this channel encourages everyone to find any market to either trade or invest in, because we are in a time where we really don't have a choice. So let's begin. Welcome to Futures 101, the basics and getting started. Brief disclaimer, this is not an in-depth overview of the futures market. It's literally the basics. And by the basics, I mean, what is a futures market? What is a futures contract? What's a tick? And what is margin? Now, a futures market is an exchange where standardized futures contracts are traded. Now, a futures contract is a type of derivative contract agreement to buy or sell a specific commodity asset or security at a set date for a set price. So, when a party enters into a futures contract, they are agreeing to exchange an asset at a defined time in the future. This asset can be a physical commodity like crude oil or a financial product like a foreign currency or cow. Contract trading codes are typically 1 to 3 letter codes identifying the product, followed by additional characters indicating the month and year of expiration. For example, S&P 500 E-mini. The code for that is ES. NASDAQ 100 E-mini. The code for that is NQ. Dow Jones E-mini. The code for that is YM. I think you get the point. As you can see, for each month, it is followed by a letter. So, for example, the display code for the E-mini S&P 500 futures contract expiring in December 2025 is ESZ 2025, while other platforms, they may show ESZ 25, right? So, all futures contracts have a minimum price fluctuation, also known as a tick. Tick sizes are set by the exchange and vary by contract instrument. For example, the tick size of an E-mini S&P 500 futures contract is equal to 1/4 of a point. So 4 ticks equals 1 point. And an index point is valued at $50 for the E-mini S&P 500. So a movement of 1 tick would be 0.25 times $50 equals $12.50. Now, keep in mind, each instrument has its own tick value. And you could do a quick search. You could do that, or you could check with your broker for whatever asset you choose, all right? So, what is margin? So, futures margin is the amount of money that you must deposit and keep on hand with your broker when you open a futures position. It is not down payment, and you do not own the underlying commodity. And the different types of futures margins are intraday, initial, and maintenance margin. Intraday margin is the minimum account balance required by your broker to hold a position of one contract, long or short, during trading hours. Initial margin is the amount of money required to be deposited in a trading account to open a futures position. And then maintenance margin is the minimum amount of money that must be maintained in a margin account after all potential losses have been accounted for. If the funds in your account drop below this level, you may receive a margin call requiring you to add more funds immediately to bring the account back up to initial margin level. So, getting started, I would suggest to initially create a development plan. That is your plan of developing into the trader you want to become. Second, you want to gain a thorough understanding of the futures market and what moves price. Third, you want to study price action. That will entail you possibly learning from someone, whether you buy a course or on YouTube. And then you want to pick a broker. You want to trade demo and develop an edge. And most importantly of all, you want to focus on the process. And once you begin to transition into live trading, after 6 to 12 months of consistency, you will start small. You will deposit only disposable income into your broker's account. And as you trade, you will be conservative and you will build the account slowly. As you develop and build your account slowly, you are learning to think in probabilities instead of banking on every single trade. As my mentor would say, expect the first 10 trades to be losers. Now, as you trade, you would then start to refine your edge. The more you learn, the more you experience within the market. And so I hope that was comprehensive enough for you to get started with. I think people wait to get started because they think everything has to align, all the stars have to align. But as long as you get started, right, you'll learn along the way. And so hopefully you got enough to just get started with. Obviously, you don't want to risk a lot of real capital in the beginning. So that's why you want to find a broker and start trading demo, right? So you can learn how to trade, get your feet wet, get those reps in. And so hopefully I was able to help you with that. And if you have any questions or if you have maybe more that I can add in another video in the future, please let me know. This channel is here for you and your growth and your journey. And I'm just sharing mine so you can learn from my mistakes, learn from my successes, so that your trading or investing journey can be fruitful. Okay? And so leave a comment, like, share, subscribe.